Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, closing out the year here, and as we enter 2018, just want to give everybody a heads up. I'm not going to be doing these daily videos with these same tickers day after day after day anymore. I'm going to be a little bit more agile, shifting around to setups that I see that I like, and plays that have opportunities, and plays that have a lot of attention and volume and volatility. Going to be looking at big cap names as well as low cap names. So I appreciate everybody watching up to this point, but just want to give that heads up. XLK, Apple, and Facebook on the daily, weekly time frame. XLK higher low established at 63.88. That's our new key support level to keep the bulls in control. A fairly weak bounce at this point. If you look at SPY, the bulls are much closer to an all-time high than XLK or QQQ is, which tells us that the tech sector is not leading the way in terms of strength as of right now. But we're still just fine for the bulls overall. So we'll see if we can continue these higher lows and higher highs. Again, no red flags whatsoever unless we see a break of 63.88. Weekly time frame is testing exponential support, which has been holding for 4 months. If that were to be lost, it would be a red flag. If we were to see a bearish TCG cross of these exponential moving averages, that would be a red flag, neither of which are close to occurring. Apple on the daily time frame got some follow through for the bulls today. Inside bar bull break with the open and the exponential resistance being tested and rejecting the price. So that shows us a bit of weakness. If we can't get over these daily exponential resistances, the bulls are not going very far. We're filling the gap back up. The gap fills at 174.50, but there are moving average resistances in the way. If we see a break of the low of consolidation, which is our double bottom here, 169.68, that is a big red flag for the bulls and likely to see further downside from there. Apple on the weekly time frame, potentially losing these exponential moving averages. Not really necessarily likely tomorrow, but next week, if we break that low that I just pointed out, we will lose these exponential moving averages, and we'll be looking down at this must-hold level to keep the weekly higher low pattern intact, and that's down at 166.46. Facebook on the daily time frame saw some significant follow-through today, but a big upper wick of profit taking as the bears took over and we closed back near the low of the day. Resistance is 178.94, support is 177.68, and if that breaks, it's just another lower high on this daily chart, and it'll be up to the bulls to form a higher low compared to 174.67 if the bulls are looking to turn this trend around. So on the weekly time frame for Facebook, still holding that middle Bollinger Band just fine. It will be a red flag if we lose the middle Bollinger Band and see a bearish TCG cross of these exponential moving averages, again, both of which have not happened in 2017 and a little bit close to happening now. The tech sector is seeing slight weakness. Again, it's all relative just because we haven't seen much weakness whatsoever in 2017. When we do see weakness, it's quick flushes and V-shaped recoveries. This is a little bit more notable in terms of its slow and steady fade, but as of right now, no major red flags, but it is something we're keeping an eye on. Perhaps we see some funds shift around towards the energy sector and maybe the biotech sector, other sectors here in 2018. So I appreciate you watching. We'll see you over the weekend. Hope you have a great night.